We are here, we are here, we are here on this amazing day. Everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's get back to business. The time now is 10:38 Eastern. The date is January 21st, 2021. Happy birthday. So let's check out the market. Let's see what's going on. So we're checking out EU. That will be EUR USD. That's the Euro versus the United States dollar. So let's mark up the EU on the monthly time frame. Let's identify in the market what's going on and where we at. So the first thing we're going to do is let's start off with our paintbrush. So this is where the market started off at. So this is the area the market started off at. And then from there we can, first thing we see in this pattern, I'm going to zoom in just a little bit. So what we see in this pattern is a W. So it started off with a drop. It created that W. So we know when we see a W that the market may go up. And we received the confirmation from this area here where we see that retest of that red candle. It retested, the market pushed up to higher highs, came back down to retest previous areas to push up higher. So this area here is when market created its higher high. So the market started off somewhere in May of 93, and then the market ended up pushing up to the highest in August of 95. From there, the market twinkled down, and from what we see here, we see another W, but then after the W, we see the push up, we see the retest, but it wasn't able to push up further. So the market came right down for a hard drop, came back to retest previous resistance areas to drop down further. From there, it jumped into a consolidation zone, as we see here. So all it did was bounce down and up. So you could have been buying and selling within that market of what's this, July of 2001. And then from there, the market pushed up, retested the support to push up higher. So we got about 1, 2, 3, 4 pushes to the top, came back down, create an area of support here. We see an area of resistance, kind of bounced up in here for a few months before it actually broke out. Once the market broke out, we can see that the market has reached the highest highs that it has ever been. So back in the month of June 08, that's March, April, May, June of 08, the market was at the highest. So the market came down for its support. I think I see a W here. It pushed up higher. The retest happened somewhere here. The market pushed back down, and it created, now we can see it's like a down trend of a support, kind of bouncing around. It's not like a clean one, but it kind of bounced up and down. But then we also see higher lows, lower highs in this area here. So we can see that the market is putting itself in some type of wedge consolidation pattern where it's bouncing up and down. So when we would have seen this, we could have got in this market and has been buying and selling the whole time to support the resistance. Once we got in this area here, we would have seen that the market wasn't able to bump up further through the support of these areas here. So then what the market did was it came straight down. So once the market came back down, it actually broke our previous areas of support. Once it broke previous area of support, I'm going to drag the support area all the way down to the side, all the way across, so we can see what's going on in the market. So once the market broke the support, it created another area of consolidation, and it just bounced up and down within here. It touched support about 3 times, so 1, 2, 3 touches before the market pushed up to resistance again. It actually broke the resistance. It created new levels of higher highs. The market wasn't able to sustain the whole on top of the support of the resistance. So what they did, it broke through the resistance again, and then it headed back down to support. Once the market back down to support, this is maybe about the fourth touch. Got 1, 2, 3, 4 touches to the bottom, which we see that the market, it has a strong support line right here, which is not breaking. So it had 4 touches to the bottom, 2 touches to the top. So there's a chance that it may keep touching the support at the bottom, it may not break through, it may push up higher. So then the market came back up in this area here. Once the market got here, it created it reached the resistance line, and we can see previous resistance is touching. So we have to identify what's going on in this market here. Is it the market's going to go back down? Is it going to break our resistance to go back up? And maybe we can find out how far it's going to go up. But we plan around this circle right here. So what I'm going to do now, I'm going to clean up my screen for you guys. We're going to take off the drawings, and we're just going to pay attention to price action. So price action, so I'm going to draw it out once again. So price action will be this area here. Wrong. Correction. Price action is here. So this is where this last red candle, that's what current price is. But we're not just going to pay attention to what price action is. We're going to pay attention to this overall section. So this overall section shows that what we see some type of resistance here. We see a strong support here. The market is bouncing up and down. We want to see if it's going to touch this level here. If not, it can reach areas of new lower lows, which would be somewhere in this area here. So the market came down, bounced up and down, and now we got to see if the market's going to break up. Is it going to break up to new areas of resistance, or is the market going to not break and just bounce around in this consolidation space? And that can happen as well. So in the last one, if the market doesn't break, it could come down back to support and then break down further and then bounce around in here or go back up. We never know what the market's going to do. Thing that we do is when it comes to watching the market is just identify what the market is doing, and we just wait. Be patient. Let the market do what they do. Do not rush the market. Do not predict the market. You can predict the market in certain positions, as in, okay, you know what? I would say predict the market as in being, this is Forex 101. This is predicting the market as in you want to have a little bit of a prediction when it comes to, okay, if the market is moving around and it's in some type of, if the market is moving around, it's some type of support and is between its support and resistance, we can identify, okay, you know what? There's only 3 things the market is going to do. It may break up, it may break down, it may say consolidation. Once we identify, okay, you know what, the market broke past areas with resistance or support, or is in some type of consolidation phase, what you want to do is wait for the market to confirm a pattern that we recognize from the Forex pattern cheat sheets. So once we see a pattern, we can take entry for the buy, for the sell, or if you experience and you like trading consolidation, you can trade a consolidation if you like. So that's EU on the monthly. So I'm going to clean this up for you guys. I'm going to take off my drawings and I'm going to put some SR lines, support and resistance lines, and trend lines. So let's start off with our trend line. So we don't really know if the market's going to go up or down. We see that this area here, this is the uptrend that we can see. It pushed up to the top, it came back down, retest. So it has a support here that's trying to push up further. So for right now, we're going to draw an uptrend. If it breaks out uptrend, then we'll just change the direction and go down and take it for a sell. If not, then we'll just wait. So I want to turn that uptrend to green. And on a monthly, I want to make it real close and tight so we don't have to do too much tightening up on a weekly. And I'm also going to get it real nice and close. So from there, we're going to grab our SR line and we're going to create, okay, if the market break this area here, it's going to go up to here. So if the market goes back down, there's a chance it can go back down somewhere within this area here. And if it breaks down further, if it breaks out of this area here, we know it probably would be headed somewhere down here. So that's the markups for on the monthly. Let's go down to the weekly, see if we could see what the market's doing. So on the weekly, we can see that price is respecting our trend line. As we can see, it's bouncing, it's riding up our trend line, and it's trying to reach area of support. So it is not at our resistance line yet, but it can be another push up to the top, or if we see a confirmation candle, it can turn around and go straight down. With a trade like this, I wouldn't be quick to take entry just to take it to these few pips for this resistance line. I would actually wait to see if the market is gonna. I'm gonna draw this out a little bit. I'm gonna wait until the market ride our trend line, which it's doing, and I'm gonna wait till the market. So it's doing some type of retesting, some type of support. It looks like here, or it could be breaking through a support on a lower time frame. So if we go up higher, I will wait until the market gets up to this area to look for entry to see if I'm going to take it for a, see if we're going to take it for a sell to go back down, or if it breaks through our resistance, we can take it for a buy and take it to the upside. Let's go down the time frame a little further, see if we can find a direction of what the market's doing. So that was the weekly. The way are we on the daily? Now we also can see EU on the daily is definitely respecting our trend line. It's actually riding. Even, let me see, like if we tighten this up on the daily, we put it about right here, we can see that the market, it actually looks like it's going up. So I'm going to check it a little close up to these last few candles, 1, 2, 3, 4, 5. So we're going to discuss these 5 candles so we can see that the market was at a area of resistance. It came down to a area of support here. We see a doji candle here. This red candle right here is a doji candle. I'm gonna circle it and then I'm gonna erase it. So this candle right here is a doji candle. So what this shows that the market don't know what to do. So the market is indecisive. So the market came down and we see an antenna down to the bottom. So this little red antenna shows me that the market may not push further than this area here. There's a chance it can turn down, it can shoot up and come down further, but for right now, this is where the market looks like it's going to stop at. From there, this green candle, the first 1, 2, 3, the third candle to the back to the last, it shows that it's engulfed over the red candle. So that can be an area of, you know what, we can probably take entry on this and take it for a buy. If we see that the next candle is red but it ain't dropped down lower, we can see that the market is not going to drop down. Next candle form, which is the price action candle that's currently in play, which is this green one, we can clearly see that it engulfed the red one, but it didn't close out. So if we look over to the right hand side, we can see that the market says 6 hours and 8 minutes and 11 seconds, counting down 10 seconds, 9 seconds, 8 seconds. So the market has to close out within the next 6 hours. That should be around 5 p.m. So once it closes out here, that can be another chance of entry. And if I go down to the 4 hour, we can see that the market is looking bullish. So we can see that the market came down to our support, came up to a resistance, came back down to retest a area of support here, and then now we see 1, 2, 3, 4, 5 candle pushing up to the top. And with these 5 candles pushing up to the top, we also see that these 5 candles overlap this whole area here. So that looks like the market's going up. So it may be a candle that may probably come down here to retest previous areas of support before the market pushes up to the next area of our blue line. So I'm going to clear my screen once again, and we're going to calculate the pips. for these amazing moves. Okay, so if we take entry here, if you don't want to wait until it gets to this orange line for the breakup or breakdown, you can take entry here, or you can just wait, depending on your experience. Like, you know, don't be greedy, just take your time with the market, identify what's going on. If you don't know what's going on, just wait for the market to get to this SR line, which will be the resistance line, and then look for entry. If not, if you experience, you feel comfortable taking it here at the bottom on top of this trend line, you also can as well. But because it's close to an area of resistance, it can be an early turnaround. You never know. You got to probably keep your eye on the market if you do take entry in this direction here. So now from there, if we go down, so let's calculate some pips. So let's say if we do find entry in this area and it look like a safe position to take, we can take it from here all the way up to this orange line, and that will give us an estimate of that's 296 pips. That's an amazing move. And for the stop loss, there's a long way down. So this is when it gets iffy, because if you pull the stop loss down, this is the area of support. Where is it at? So that's about 102 pips. If we pull it down further, the next area will be somewhere here. That's already 246 pips, 296 pips. That's 1.2 on the ratio chart of risk to reward. So if it's the reward where we will be receiving 261 pips within that trade. Amazing. And if the trade go against us, that's about 246. That can be an L, which would be a loss. A trade like this, I mean, I personally don't take trades where the risk reward is even, like 1.1. I'll probably try to get it to like somewhere here, like a lot closer. But because the market is not at an area of support yet, there's a chance that the market can, let me clear the screen. So there's a chance that, so I'm gonna show you guys a little tip. So if this is the next area of support of, let's say if the market doesn't break up further, it can drop back down to here to go back up, or the market can drop back down somewhere in this area here to come back up. So or just turn straight around and just turn back around. So when you're trying to take entry closer to a resistance or support or a SR line, you may not want to jump in until it probably gets closer to our support resistance. Because taking entry here, this market can go up and then turn right back around, do a major drop, and it can stop you out. So you probably will have to take that L, and then you can probably take entry again to take it back up. But who wants to go through all that? So the play is safe with a trade like this. You can just wait for the market to get to the SR line, which is the orange one, or you can take entry here and look for entry here if you find it. So the choice is yours. Yeah. So that's EU, and we're looking at about 270 pips for that move. If we took entry, where's it at? If we look for the next breakout, and let's say we wait for it gets to the orange line, it breaks out further from the orange line, how many pips are we looking at? Let's grab our ruler, and we're gonna place it here. We're gonna pull it all the way up to the top, and that's actually 1,411 pips. That's an amazing move. Amazing move for this trade. For the trade like this, definitely we'll get into it. Alright, so that was EU, and we just went over the last part was pips. So let's take a quick look at the Forex cheat sheet. What I have available for you guys is the reversal chart pattern cheat sheet, and this is something we kind of worked on. We worked on a little bit yesterday. Just want to finish off a few other patterns with you guys. Let's take a look at the bullish triple bottom. So the bullish triple bottom, so all this is price is returning to a major area of support. So price is coming down from somewhere, It bounced up and down, so we see W's, we see M's. So we don't know if the market is going to shoot up from a W or it's going to shoot down from an M, but it's bouncing around, and all we see is a triple bottom. So you would just wait till the market do its thing and bounce up and down, and then once you see that confirmation and that reversal, because once you see that certain amount of touches to the support and it don't break through, then it's possibly going to turn around, which the market did in this picture here on the bullish triple bottom. The market came here and then pushed all the way up to the top, actually did a reversal. So the market came down from somewhere, hit a major area of support to go back into that same direction it came into for the reversal. When we look here for the bullish expanding triangle, all that is just expanding wedge pattern. So as we can see, the market came down from somewhere. It was a tight squeeze here. It bounced up to resistance, came back down to support, created lower lows, came back to the same areas of resistance, created lower lows of support again, came back to the areas of resistance because it's all kind of lining up together. It wasn't able to break, came back to areas of lower lows from the previous areas that we see here. And then the market didn't break down further, probably lost momentum, and it shot up and went back into the opposite, into the same direction it came from. Let's take a look at the bullish falling wedge. So with the bullish falling wedge, similar to the bullish expanding triangle here, only thing difference is what I'm seeing, that the market came down from somewhere and it has close area support and higher lows or lower highs areas of resistance. So the resistance areas of these tops, these tips right here, these triangles, we can see that the market pushed up, wasn't able to break, came down lower, created higher lows, pushed up, came down, pushed up again, created higher lows. So the market shows that it's coming down, but it's losing some type of momentum. So if you don't know if the market's going to reverse, all you have to do is just be patient, stay within the patterns, and just watch what the market do. And once you see that confirmation of the market going for that you can take entry for a buy or take it for a sell, then you just get in, because it don't always have to do what we see here. This is just an example. At the end of the day, the market does what it do. If the market shows in this picture that it's going to go up, hey, next time we see it next week, it may just go down if you see this wedge pattern. You see what I'm saying? So it all depends. So never jump the gun to say, okay, you know what, I know the market's going to do this because, you know, this is what I seen or this is what I know. You know, you never know what the market's going to do. The market's going to do what it do. So once you see that confirmation, you take entry. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching.